Remember Evergrande? In late September and early October of last year, they were the star of financial news. Everyone was worried about what would happen if this massive Chinese institution defaulted on their debt and ripple effects that it would have on the world. We saw headlines like, Fed warns China's property problems could hurt global markets and the US economy, and Wall Street marks biggest drop since May as Evergrande crisis intensifies. Yet, as the Fed started raising interest rates and the stock market started to sell off for other reasons, it seems that most people have completely forgotten about this once monumental threat. This isn't to say that the Evergrande situation can be completely ignored though, as the crisis has only gotten worse. In fact, at the end of last year, Evergrande defaulted on $1.2 billion worth of foreign bonds. And as you would guess, their stock price has only fallen further and further into the abyss, standing at just 17 cents today. So, whatever happened to the Evergrande crisis, and does Evergrande even matter on a world scale? Before we get into the potential consequences of the Evergrande crisis, let's first take a look at how this crisis even formed in the first place. This was not something that just took place over a matter of years. Rather, this issue has actually been brewing for decades, going all the way back to the 1970s. You see, in 1978, the Chinese government adopted a new economic policy that many scholars call China's open door policy. Before this ideology was adopted, China was completely closed off to the world economy. They practiced an ideology called Zhongzhu Wei Ti, Zizhu Wei Yang, which translates to Chinese learning as substance, Western learning for application. As the name suggests, China was intent on maintaining their traditional culture as well as their communist political and economic systems. However, they were willing to import technology from the West and implement it into their society. While this strategy worked decently for much of the 1900s, it came with a slew of shortfalls. First of all, China was barely involved in foreign trade, and secondly, no one wanted to invest in China, which made it increasingly difficult to keep up with the West. Not to mention, China's economic and political landscapes had been devastated by the Cultural Revolution, which took place between 1966 and 1976. So, in 1978, China finally gave in and adopted the open door policy. Things didn't just change overnight though. China spent years deciding which sectors they needed to control and which sectors they could loosen up. China was by no means willing to give up land ownership, but they were willing to privatize how the land was used, and this brings us to the Amendment Act of 1988. This amendment made it possible for companies and individuals to use land to their liking by obtaining land use rights. This opened the door to a wide number of entrepreneurs who were looking to build real estate and property development companies, and as you would guess, Evergrande's founder Zhu Xian fell under this category. Zhu was actually a bit late to this trend, as he didn't start Evergrande till 1996, which is 8 years after the amendment was adopted. Nonetheless, Evergrande would leverage this new opportunity to the max, and the company would grow exponentially over the next 2 decades. Evergrande's growth was only further accelerated by China joining the World Trade Organization in 2001. This made Chinese investments more appealing than ever before, which allowed Evergrande to grow an international base of investors and stakeholders. Ironically, Evergrande actually went public during the height of the Great Financial Recession in October of 2009. But despite this, they were still able to raise $722 million, which just goes to show how much interest there was in Chinese real estate amongst international investors. All of these factors would allow Evergrande to become one of the largest property developers in China and one of the biggest companies in the world. In fact, the company was and still is part of the Global 500, coming in at rank 122. This monumental growth didn't come for free though. Evergrande was constantly taking on more and more risk, which would eventually come back to haunt them. One of the biggest risks of the Chinese real estate market over the past 2 decades has been their ever-growing real estate bubble. One of the most famous examples of this is the dozens of ghost cities located across China. If you're not familiar with China's ghost cities, these are essentially massive developments that never became inhabited. Oftentimes, you see dozens of skyscrapers and buildings that are completely empty and sometimes not even finished. Now, you might be wondering, how in the world do these ghost cities even form in the first place? Well, if we take a look at Chinese real estate law, we'll quickly begin to understand how exactly this happened. China separates real estate developments into a few different categories, starting with economically affordable housing. China requires that such projects are occupied by the owner, and these projects cannot be bought or sold as an investment. On top of this, real estate companies cannot sell these properties for more than 5% over the construction cost. So these projects aren't particularly lucrative or appealing. One category that is super appealing though is commodity housing, which can be bought and sold as an investment in most cases. And in China, there's extraordinary demand for real estate. Real estate is often thought of as the best way to grow generational wealth, so even many middle-class families opt to buy second and third properties as soon as they can afford it. Also, China has yet to experience a 2008-style housing market collapse. So as far as the everyday Chinese person knows, real estate prices only go up. And honestly, this is not a bad bet. Even if there is a crash, it's just a matter of time until real estate recovers because people will always need land. But here's the problem, you can't own land in China. So if you want a piece of real estate in an area that you think will develop in 20 or 30 years, you have to build something on it right now. And when millions of Chinese people are thinking the same thing, it doesn't take long to garner enough demand to build an entire ghost city. So while these cities are indeed mostly, if not completely empty, they're also completely sold out. This has provided Chinese real estate developers with unprecedented demand. But when all of your demand comes from investors and not people who are looking for a primary residence, it just takes one market downturn to obliterate your demand. But wait a minute, there's no way the Chinese government didn't see what was happening, right? How did they not think to stop this unsustainable practice? Well, the answer is twofold. First of all, local governments are super incentivized to sell land rights to these development companies. You see, municipal governments only get to keep about 40% of their country's tax revenue. The rest must be passed on to the CCP. However, local governments have to pay for 80% of their expenses. So, local governments have to do something to overcome this funding disparity, and the easiest answer for them has been selling land rights. In 2015, for instance, land transferring fees accounted for 40 to 60% of local government revenue. This is not that surprising when you consider that land sales brought in $438 billion for local governments in 2012. I don't think I need to explain why local governments were a fan of ghost cities. But what about the CCP? Surely, they could see that this was a massive bubble waiting to blow up, right? Well, they did, and they would eventually take action, but not before letting the situation get too far out of hand. You see, the CCP was also massively incentivized to turn a blind eye to these ghost cities. The CCP wasn't directly pulling in cash from land sales like local governments, but they were able to pump up the Chinese GDP. The Chinese real estate industry accounts for 29% of the entire country's GDP. So letting these ghost cities pop up was extremely beneficial in terms of catching up and beating the US in terms of GDP. At first, this wasn't a big issue as real estate developers were pretty responsible financially, but it didn't take long for greed to kick in for developers like Evergrande. They started taking out substantially more debt and their debt-to-equity ratio fell off a cliff. For example, in 2014, Evergrande had 112 billion yuan in equity and 206 billion yuan in assets. This gave them an extremely healthy debt-to-equity ratio of 0.839, meaning that they had more equity than debt. By 2020, their equity had grown to 350 billion yuan, which sounds good until you realize that their assets had grown to 2.3 trillion yuan. This results in a super dangerous debt-to-equity ratio of 5.57. If Evergrande was an average American, they would have had to take up PMI or private mortgage insurance because they didn't even have 20% equity. This issue wasn't just limited to Evergrande either. Many Chinese real estate companies were in similar positions, which made it abundantly clear to the CCP that they had to take action. In August of 2020, Chinese regulators met with the country's largest real estate companies, including Evergrande, and they introduced 3 restrictions called the 3 red lines. These restrictions put caps on 3 debt ratios, which were debt to cash, debt to equity, and debt to assets. As you would guess, Evergrande did not exactly fall within these restrictions, so they would start selling off properties and raising cash. For example, in September of 2020, they discounted properties by 30% to increase sales. Similarly, in October, they raised $555 million by completing a share offering. They also canceled certain projects, but none of this was enough to improve their financial situation substantially. Nonetheless, Evergrande was able to stay afloat thanks to sufficient cash flow, but it didn't take long for this to go downhill as well. In late 2020, Jack Ma and the CCP would get into a bit of a conundrum, which prompted the CCP to crack down on Chinese tech companies. While most of the CCP's actions were directly targeted towards tech companies, as tech stocks crumbled, so did investor confidence. And as investors started pulling back on real estate investment, Evergrande's net profit started to decline as well. In August of 2021, Evergrande reported a 29% year-over-year decline in net profit. And given Evergrande's already fragile position, this was enough for default fears to go rampant. Evergrande continued to insist that while they were facing issues, there was nothing to worry about. You could say that these were their famous last words, as Evergrande would miss their first set of coupon payments just a few weeks later. Shortly after, Evergrande would begin missing coupon payments on a regular basis until they eventually defaulted on $1.2 billion worth of debt. The CCP has never publicly acknowledged that they're bailing out Evergrande, but that's basically what they've been doing. They're not exactly saving the company itself, but they're trying their best to ensure that the collapse of Evergrande does not lead to further consequences. And the main way they're accomplishing this is by nationalizing the company. For example, local governments have been seizing rights granted to Evergrande. Similarly, China's central bank freed up $188 billion to help alleviate any liquidity problems caused by Evergrande's default. Evergrande has also been selling parts of their own business to raise cash and to pay off debt. So at this point, it does look like China has Evergrande under control and that they'll be able to contain the crisis, but only time will tell. Do you think the Evergrande crisis is behind us, or is it just a preview as to what's to come? Comment that down below. Also, drop a like if you think that China's ghost cities are spooky. And of course, consider joining our Discord community to suggest future video ideas and consider subscribing to see more questions logically answered. But until then, I'm Hori, and I'll see you guys on the next one.